Hello and welcome. This is the earnings special where we are addressing some of the key earnings that came out through the weekend. We have Justdial, which has reported a stellar first quarter performance on the back of better realizations from Tier 2 and Tier 3 cities. Also, the board has approved a share buyback worth up to 220 crore rupees. Let's find out how the company's planning to execute this from the CFO, Abhishek Bansal. Abhishek, good morning and thank you so much for joining us. Let me just start off by asking you about the strong quarter that we have seen so far. But the real question is, can we expect Justdial to continue to sustain these growth rates that we've seen, not only on the top line, but also on the margins front for the rest of the financial year?
Right, so we had a very great quarter. We look at our business health on three parameters. The first parameter is the user growth. So this particular quarter, we had about 125 million plus unique users, which was about 25% year-on-year growth, despite a high base of 100 million users. So in last 8 quarters, we have gone from 75 million to 125 million users, addition of 50 million users, which I think is phenomenal. Secondly, this particular user growth is now translating into monetization as well. So revenue growth stood at about 11.3% year-on-year for the quarter. And considering the cost controls and optimizations that we have been bringing in over last 4 quarters, EBITDA grew about 77% year-on-year, which I think is great. In terms of sustainability, definitely on the revenue growth, we would want revenue growth to accelerate from current levels, and the last couple of quarters gives us the confidence that we are pretty much on track for that. On the profitability side as well, definitely profitability trends should also continue in line with the cost optimizations as well as revenue growth.
Abhishek, we'd like to know a little more about your search business as well. In this case, specifically Search Plus. Can you tell us a little more about the visibility in earnings?
See, on the search business, the core business, which is where we are focusing our energies the most, we released our new mobile site about sometime back in the month of May. The new mobile site has cut our page load time by about 40%. So that has actually helped us a lot. The new iOS app has also gone live, which is loaded with several new features such as curated content, real-time chat messenger, live news, videos, etc., which should result into higher user engagement. So these are some of the initiatives that we have taken on the search side. On Search Plus as well, a lot of optimizations and improvements are continuously happening on all specific verticals. So the idea is to have as many users as possible to come to our platform and engage for as longer time as possible with us.
Abhishek, your realizations have also improved, certainly on a sequential basis. How has this mix shifted towards Tier 2 and Tier 3 cities?
See, Tier 2, Tier 3 cities, definitely they are growing in share. So they contribute about 23% or so to volumes, which is campaigns. But in terms of revenue contribution, in terms of campaigns, they contribute about 44% and revenue contribution is about 23%, which implies that the ticket size in Tier 2, Tier 3 cities is much lower. But yes, the incremental growth, a higher percentage is coming out of Tier 2, Tier 3 cities.
Right, Abhishek, if you could also tell us a little more about the pricing action that you've seen in the first quarter and also what we can expect into the next few quarters, whether or not we can expect some more price hikes coming through.
So our algorithm works in a manner that based on traffic trends, it automatically adjusts prices up and down for our premium listings. There weren't any specific entry-level price hikes that we took in this particular quarter. I think on a sustainable basis, based on whatever traffic trends are, realizations should get adjusted accordingly.
And can you tell us a little more about the transition to transaction-led platforms?
See, as we have mentioned in the past, that enabling transactions obviously complements our search business. So in several particular verticals, we have taken a meta approach wherein you get various choices. So in case of like shopping, if you search for a particular product, you get to see prices that are offered by various online players. You also get to see vendors which are dealing in those particular products. So the idea is that Justdial should be a one-stop destination for whatever a user requires. Similarly, there are other verticals where we continue to work on enhancing user experience pertaining to transactions, and those efforts, I think, are an ongoing process.
Finally, Abhishek, you have announced a buyback worth around 220 crores. My question then is, can you tell us a little more about the timelines that you plan to bring the execution within, especially keeping in mind that you already have carried out a buyback last year?
So the board has approved buyback plan of about 220 crores. There are certain statutory approvals that are required to be taken. And the previous buyback that we had done last year, the new buyback can be done only 1 year post that particular buyback. The deadline ends somewhere in September end. So it would likely take about 3 months for this buyback to get concluded. Obviously, with regard to approvals, we shall start all those particular processes right away.
All right, Abhishek, we leave it at that. Thank you so much for joining us and giving us an update on the quarter's numbers as well as an outlook going ahead. But we've also had earnings from Bajaj Auto, which actually failed to meet analyst estimates in the June quarter. What have been the key highlights of the